Hello friends, today's topic Corona once again. Will markets crash? Question mark. I am Dr. Bharath Chandra. Purpose of the video is financial education of society. In the last few days, COVID-19 infections are gradually rising in some Indian cities. Delhi, Mumbai, Bangalore and parts of Gujarat, Kerala and Haryana have reported new cases recently. Government health authorities have urged the public to be cautious while at the same time assuring people that their situation remains under control. This particular COVID variant is highly transmissible, but symptoms remain quite mild in most cases. Doctors are suggesting people to wear masks in crowded places and take care of hygiene as usual. So let us not be too concerned about it, but let us not be careless about it. When COVID was first spreading all over the world in 2020, global stock markets fell heavily between February and March 2020. Nifty was down around 38% at that time. However, it quickly recovered and led to a very good rally which attracted crores of investors into Indian stock markets. Many people have been asking in the comment section whether there can be some correction again due to rising COVID cases. It is usually said that stock markets does not fall for the same reason unless the situation is extremely bad. So the present COVID cases is likely to have limited impact on the stock markets. However, at the moment, there is another temporary reason to keep markets slightly volatile and weak. As of now, US bond yields have gone up significantly due to the US credit rating downgrade by Moody's. The following is how it impacts the stock markets. Comparison of returns for FIs. Pre-tax returns financial year US bonds 5%, Indian stock market 13.5%. Post-tax returns US bonds 4%, Indian stocks 9%. Post-currency returns in the US dollars 4%, Indian stocks 5.5%. FIs are able to get around 4% per annum fixed risk-free returns due to the rise in bond yields, whereas they have to take high risk to have a chance to earn around 4 to 6% per annum from Indian stock market investments. Usually the bond yields are much lower at around 3%. So at such times, at least temporarily, FIs reduce their focus on foreign stock market and invest in US bonds itself. Also, US markets have fallen by around 1% on Friday since US President has once again threatened European Union with a 50% tariff from 1st June 2025 since the discussions were not being very productive. This also led to a fall in European markets on Friday evening. US President also repeated his stance on making Apple manufacturers in US for sale of iPhones in US. He was not supportive of the US manufacturing in India and selling it in US. If in case Apple manufactured outside US and sold those mobile phones in the US, President Trump threatened to impose a 25% tariff. This led to a fall in some technology stocks in the US such as Apple, Nvidia, etc. Due to the weakness in US markets on Friday, Indian markets are also likely to open slightly weak on Monday. As we had been predicting since July 2024, Indian markets have fallen and have not yet recovered to cross the previous high levels. Probably in the second half of 2025, Indian markets could continue to be trading in a similar range but gradually rise and cross new lifetime highs unless there are more negative announcements by US President. End of the video, here is a question. Do you think rising COVID cases will negatively impact Indian stock markets? You may type yes or no. In case you are not the member of this channel, this is the time to subscribe, press the bell icon, send the video to all your friends. The video is good, press the like button. Thank you for watching. Bye bye. All the best.